Hello guys, welcome to a Trading Parrot. Today is 1st of December and we are starting the month with a little bit of a puke in the price action of Bitcoin. Bitcoin lost the 90k support. Apparently there is a very critical reason why this is happening, which we are going to cover in today's video along with looking at all the charts. Remember, on 1st of December, the things that we need to do. We need to look at the CPR levels to understand the forecast of the price for the rest of the month. We're going to look at past performance on the monthly returns too. There's a bunch of signals that I want to share with you, and I'll update you on all the different time frames just like we do on the first of every single month. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. 1,000 likes is the best thing that you can do during a price puke of Bitcoin. So thanks so much for doing that and writing down a comment below. So let's start with the monthly returns, and as you can see, we are starting precisely how people wanted and expected this to play out. After an October-November in red, people focus on what's going on in here, and that December in 2018 was kind of giving the hint to people that December could be in the red. But hold on the horses, because we just started a few hours of December, so we cannot yet claim that this has played out. After all, we have a 3.9% and we could go into the mid 70s and still come back and end up on a green month. After all, I do not trust seasonality month returns on Bitcoin, particularly on this cycle. Why? Because more than 60% of the patterns have broken and we cannot use it in a positive or in a negative way. Let's go to CME gaps. It was a very interesting weekend because we had Thanksgiving, so we had also an outage on CME exchange happening in the middle of Friday. Their servers went down, silver was pumping, there was a gap in the middle of the day that got filled over the afternoon of Friday, which is very interesting. I never seen such a thing. And then we ended up closing on Friday at a price on Binance of 91k, give or take. And that is precisely the open candle on the end of Sunday, beginning of Monday. And from there was no gap form. Of course, different indicators that capture CME gaps are going to show you gaps, but it all depends on how you interpret the gap. Personally, I think that from the price of Friday, as I can see here, if you focus on the lower end of the chart, that is the last candle of Friday, and the first candle of Sunday, as soon as the market opens on UTC time, is at the same price. And immediately with the Asia open, we start seeing this collapse in here. And apparently, according to this post from Joe, Bitcoin is down 5% since the Asian open amid rate hike expectations out of Japan. All gains since last Wednesday have been lost, 150 million in total long liquidations. Specifically on Bitcoin, so far we have 188 million liquidations. If we consider the whole crypto market, that is over 500 million. So we continue with this trend of seeing the oscillator being above 30% of liquidations. Last week we peaked at 40%. And we do not want to go into the equilibrium, neither going into the red, which will be a sign that we are not going into a bear market, because periods of sustained liquidations of longs for over 2 months is a very heavy signal of entering into a bear market, particularly if we focus in the area of the topping year. And yesterday, I was showing you that we were in the middle in the open interest price change oscillator. I told you I'm not gonna take that long. I'm interested in lower prices. To be fully honest, I do not want the price of Bitcoin to go up. Why is that? Because my average is 101 and I really want to average down at the very low 80s or sub 80s, ideally, to push my average way lower than 100k. If we start pumping into 100k with my average right there, as I've been explaining in many videos, there is a potential there to get a dead cat bounce and enter straight into a bear market, and that's gonna give it that's going to give me very little room to react, to trail, or to protect my long without necessarily having to realize a small loss. Remember that my positions at the top in year are very small relative to the ones I take in the beginning of the bull cycle, and that's why you see me really not being that concerned. My only concern, of course, is all the people that are looking at what I do and all of that. But if people are taking massive amounts of leverage and they're really not following fully the strategy, that's on them. Not to mention that I'm not giving financial advice, so anybody is all the time encouraged to do their own thing and to try to learn from what I'm doing instead. So in my opinion, in a nutshell, this CME gap that is shown in here from this indicator, that one from the red there and the gray are not valid. In my opinion, there is not a CME gap. I even drop it to the 50 minutes. I usually leave it at the 4 hour. So I'm gonna completely ignore this move into 90K and consider it a gap of CME. What I will do definitely is to consider the massive fair value gap that we have built since this very sharp move down. You can see that it took fully the gap that we mentioned of 87K on Friday. There was a chance that we got rejected from trying to re-enter into the falling wedge and we got a rejection. Now our eyes need to be very sharp in here because this could constitute a higher low. Relative to what? Well, we have done a full swing into the first attempt and then we get a rejection in here. And if we place a Fibonacci level right there, we are currently at the golden pocket. So if price hold these levels in here, that is a bullish pullback because it's half of all the move up we did. And if we can manage to hold that 85K, we can have another attempt. Why not? If we had that attempt, then once we face the 92K, we must re-enter the falling wedge and we must go into the fair value gaps that are offered into 101. But as I said, I'm part of the people that do not want that to happen. I don't want to rush into 101, just going straight up from here and facing the fact that around that level, we can have to deal with a potential dead cat bounce that can fully confirm that bear market. And yet the 4 hour won the battle this weekend. As you can see, we had this breakdown, then we form the double bottom just like this one. Look at the 4 hour, it's so misbehaved. It breaks down, it forms a double bottom with a neckline right there, and it takes liquidity by going up, by breaking out from the neckline of 58 into 60, 61, and then from 61 starts the month with a massive puke. This is a puke of RSI of 33 points in one go. That is the definition of a 4 hour, at least, puke. What we didn't do over the weekend were my wishes. I was wishing for this double bottom to complete, to get a breakout in here, reclaim yellow, and go and put a new higher high there into 69. Did that happen? No. So price action gave the preference to the breakdown there on the 4 hour, and we took the lows of 86. Around this area, there is a low there at 85.3. So technically, this is a higher low on the 4 hour relative to that week there, if you want. Now, on the daily is where we have to keep all the eyes open. At the moment, there is a little bit less of noise recently on the daily. We have to admit that, for example, in here, we tried twice to re-enter the falling wedge on the daily, and we got 3 days in a row of rejection. That up until then, it was bullish. But obviously, with the fears from Japan, Asia season decided just to puke 5% the price down. Now, we are currently holding that retest. So this is just still a normal retest. If it changes, if we come back below 29.61, then it's no longer a retest, as simple as that. Still, let's have a look at the bullish signals from the daily. How many of them have been broken today? Is the MACD giving a MACD bearish cross? Not yet. Is it pulling back and producing some histogram? Yeah, a tiny bit. So is the daily into massive risk at the moment? I will say that we need to be cold-minded on this one. The daily still says this is a pullback into the 50% retracement. From here, we could attempt once again. It's not out of the question. It's not impossible. My preference is that we actually break down and we reset back into 80s or slightly below it. As I've been saying multiple times, what I really want is carnage and to enter into a very premium entry, something that gives me amazing risk to reward. What is the cost of getting that picky? If we rally now into 101, I'm gonna have to be keeping a lot of attention on how I manage that long. Volatility is back peaking at the lows, right there at 12, and it could be potentially giving another P signal. CPR, we must cover this. It's the beginning of the month. We need to answer a bunch of questions. First of all, let me put this back on the daily so we can see what happened in the past month. We lost virginity at the beginning of the month, we came back down, we lost 2 supports, we reclaimed 1 support, and we started the month with the pivots located between 96 to around 92. So my forecast that they were going to be at 100k is now invalid. I couldn't catch the precise place in my forecast, but that is fine. Now that we know the levels, second question that we need to ask, does this constitute losing virginity? Have we touched the CPR levels this month? Luckily for the longs, we haven't. I can even drop this to the 15-minute time frame and you're gonna see what the price did. We were on Sunday trading at 91. The pivots started at midnight, and at that point the price was already at 90 in coming down on the way to the lows of 85,000. So technically this is a virgin month. Support comes in at 76.867. We got 2 more levels of support at 63.4 and finally at 46.1. That is very low. The range of the month, it's 91k. Range of 91k for CPR. So that's calling for additional volatility. And 46k is the level I don't like to hear. I don't know you, but I don't like that CPR can really put that on the table in terms of volatility incoming for December. Now for the bulls, if we start getting a rally on the table, we have 138k. That's the top resistance, followed by the second one of 124.882. First resistance is 107. Just give me that one. For my long to start trailing, that sounds perfect. If we get to touch that level, we put on the table the top 2. So at that point, I'm happy to trail my long that now is twice as heavy as my short. In theory, as we approach the first support, I could start adding to my long with the expectation of eventually losing that virginity, which happens as soon as we pinch 92k, and we continue to do so up until we get to 95.9, which is the top pivot of the month now of December. It's crazy because on the daily it looks like we did lose virginity, but actually we didn't do. Now leverage squeeze won another battle. It put another signal in there and it pushed back down, even if it was a low quality signal, but it hasn't put a new low. In this area in here, for example, right before we start this rally, it put a signal followed with a high quality short one in there. It ended up going to 74 still. That from that high is a push down of 14k, but from the signal to the upside, there was an upside of 37, 38k. So hopefully in here, we're not gonna have to go 14k down, because that means that the price gets into around 78k. So ideally on the weekly, now we are gonna lose this low and push even lower, so our fractal can be moved this way and we can average in a more effective way. Remember, my last average entry was at 91. Therefore, I really want something low. I could do 86 today. I'm tempted to do that, but I'm gonna stick to my discipline and keep it just as it is and look for that creme of la creme of entries. The weekly on the RSI didn't break out to the upside. If you're a member of my community, you will have already received this in the morning with a summary of each different time frame and what's going on with it. You can always join my Patreon, the link is in the description. The good news is that the stochastic RSI on the weekly has put the bullish cross, so that could indicate that maybe later this week we are going to have the breakout as well on the RSI. Very early, very humble signal, and longs are crossing fingers to get that to play out. We closed the monthly with November, and this is the way it closed at 57, and December is also pointing down thanks to the negative intra-candle returns so far. And looking at the monthly on the price action, you can see that my trend line in here has held the price perfectly by the dollar at 90k. So the close of the month was above 90k. That by itself, it is something. Do not ignore it because it's something important that we couldn't close below 90. Now, December has a huge responsibility of not closing in the red. Closing in the red in here sets anything above this line as a resistance. And we already have as a resistance also the horizontal line at 93.5, which was my wish for Christmas to close above 94. We couldn't do that. So now we get this ascending trend line, the one that is selected as a resistance, and the horizontal together in confluence, saying that 93.5 now has turned into monthly resistance. So we have in December to reclaim that. It is a tricky situation because if you think about it, November closed above support. We start December trading below it. So December has the opportunity now to put another week to the downside, close above 94, and no one gets angry. Nothing happened. We are still bullish. We close December below 94, and it's gonna be a lot of trouble to try to reclaim that again. Since we have a huge expectation of volatility, November was 73,000 of range for the CPR, and now the new month is putting on the table almost 92,000 of volatility expected. With 73, we moved $30,000 in total. I am hoping that $30,000 is not going to be to the downside, because that puts the price at 55k. I am hoping that from here in December we get 30,000 to the upside and we go into 110, 115k. That will be magnificent, but that is just a wish. It's not really any sort of forecast. There will never be any forecast in this channel anyways, because I never know ever where the price is gonna go. It seems that all the signals of coin days destroyed, long-term holders accelerating their distribution has done a lot of damage to the recent price action. No one can doubt that. And the ETFs slowing down on their positive moves here are not being able to contain any sort of dump that happens at the beginning of the week. We are still in extreme fear. Cerberus has a confirmed settle warning buy signal right there, so we are looking for longs. And in terms of short-term liquidity, you can see that we left on the table 95, we left on the table 100k. Good for me. We'll see if we can grab that later during this week, or if we are heading down for the 76k. On the long-term liquidity for the month of December, I will say that the longs that have entered from around mid-November are making it more difficult for market maker to leave that 74 behind. You can see that there's been a good progress in here of increasing this from green into yellow, and that means that there is now more liquidity, and it makes it more attractive for them to go not just to 74 but potentially also into 67. That is not guaranteed, but it's a step in the wrong direction if you are along. And of course, I'm not counting we go there, but if we go anywhere there, I'm really looking to pay attention to average down my long. Still in the past 3 months, 117 is the largest pool, and it's on the upside. On the past 30 days, now we have the biggest pools at 90 and at 92. There is one here at 85.2 that formed on the bounce this morning. Let's have a look at Market Monkey Terminal. We have some resistance coming in at 87 all the way to 88.5, followed by 93.5. Remember, that level is now resistance on the monthly, so they are defending that. 86 to 85 now is the support, but nothing really impressive relative to the resistance. It's pretty much equal. Looking at the order book now, we got some new resistance coming in from the 1st of December at 103, at 96, at 93, and then below we have some support coming in at 80 and at 75. Fire charts still shows the wall of buying right around there, and we got at 83K and at 81K, two levels of 50 million, and below at 75K, 53 million. You can see that it has intensified by Monday, trying to hold that 83 around there. Hopefully it's gonna hold. Purple whales are really not interested in this move, and they have decreased their exposure. Maybe they are not putting those limit orders to buy the dip. Just speculating on that, of course. Over the weekend, we have negative funding rates. That was on the 30 yesterday at 8 p.m. They got lucky because funding rates in negative and the price went down 5%. It's not something that happens very commonly on a bull market. Negative funding rates and the price crashes. It's more kind of belonging to a bear market. In a bull market, you bounce from those levels of overexposure of funding rates negatives. Now, on the longs, we have managed to come back up around the 70 right there. So that means that there has been some positions that enter the market and are defending on global longs and shorts accounts on Binance. 70%, that's positive, assuming that we are still in a bull market. In terms of support in here, it's very shallow, very equal. The support versus resistance, the bid versus the ask, 0 to 1 and 1 to 2. Flat, absolutely. Same amount up and down. It becomes more intense, that support on 2 to 5, 5 to 10, and maybe even 10 to 20. But over 20, there is a heck of resistance, I will say. And we have managed to clear all that overexposure of the longs that we've seen for a few days in a row. I think since Thursday, maybe, we've been with 300K delta. Now we have delta in the negative, and not just 300K, but 369K. So that's more than what we have to deal on the green side during the past week. And you can see that that historic level of open interest that we were looking at, the first one that we chased into, we hit that level, and then it flipped from being shorts in there into being longs. They got decimated, it came back down, and all the activity is going on at around 91, 92. That's a level of resistance where there is a battle going on between the people thinking we're gonna bounce, we're gonna break out, and then they get decimated right here. Then new shorts enter right here. They make it very heavy at 92, and it dumps into 85K. Now we have that level calling for the price going into there, which is making me very tempted to add to my long. I will think about it, and I will let you know what I'm gonna do via my Patreon if I do something. So now the levels that we still have is that 92 is the massive open interest in there, then followed by the 100K and the 103. We used to have something around the 110, and I don't understand if this is not being able to look back enough in time. I have it on the 15 minutes, so maybe I'm going to increase the time frame, because of putting the wrong time frame, it could be that we are no longer seeing, let me see on the 4 hour, right. Yeah, so definitely 112 is still there, and it contains $1.89 billion of open interest that started this short. It is very heavy, and I'm hoping that we can chase that level. You can see that the 91 is just $400 million. Then we have 696, 870 at 100K, 600 million at 107, but 112 definitely wins the battle with 1.89 billion, followed by 1.45 billion at 121. All of that is very cool, but I have no clue if that's going to be enough to push the price that high. Remember that High Block Capital is still running all the sell. You can have a look at the top link in the description to see everything that I use, including my own indicators that are on sale. There's sales for 80%, 70%, 50%, and so on. And if you're looking for an exchange to trade, 2 minutes to open an account on Tubit. The link is in the description, and they are running this particular campaign of $200,000 to reclaim your gains. Don't waste your time and open an account on Tubit. Get your $50, by the way, for free as soon as you sign up, even before you deposit. Let's have a look at the news. End of quantitative tightening is what is everybody's gonna say out there starting this week, because that was expected to start today. This marks a shift towards global liquidity easing. Additionally, Jerome Powell is scheduled to speak today, with markets pricing in an 86% chance of December rate cut. I hope that whatever he says doesn't challenge the rate cut or anything like that. Otherwise, it's gonna very quickly turn into another move to the downside. And you know, every time that Trump says we are going to cut the rates, we're going to do this, we need to do it, I'm going to kick out Jerome Powell, all I hear in my mind is that he's saying that because he already knows that Powell is going to say something bad for the rally. And it's kind of Trump trying to prepare everybody to think that he's going to undo it. Don't worry, don't let the markets crash. Anyways, just a thought. Speculation on pro-crypto Fed chair nomination. Reports surfaced yesterday that Kevin Hassett, a former advisor to Coinbase and the director of the NEC, is a leading candidate to replace the current Fed chair. That is 9 out of 10, very bullish. Let's see when that can play out. I think it's early 2026, the full transition, but people are gonna trade the confirmation, of course, as soon as it leaks or as soon as it's official. 86K breakdown with 500 million in long liquidations across the crypto market is definitely something bearish. It's putting a lot of anxiety in people have already given up a long time ago, I can see. There was a hack overnight in Yearn Finance. A hacker discovered an infinite mint vulnerability in a legacy YETH token contract. He managed to get $3 million in Ethereum. This is definitely something that affects the confidence in the DeFi sector. Not great for altcoins. Market liquidation cascade that we saw already. Altcoin outlier. While major BTC, Ethereum, and Solana are bleeding, a smaller token called Pippin has surged over 40%. Unfortunately, every time that scenario happens, that the major coins are just going sideways or negative, and you get small new memes pumping, that calls for a correction. We tend to have those corrections right at the confirmation of a new meme coin taking new highs or pumping. It kind of confirms that no one cares about this, no one expects them to go higher, therefore people shift into low volume tokens to see if they can grab a quick bite. Macro and general market insights for today. Upcoming volatility triggers. US session, 10 a.m. ISM manufacturing PMI consensus of 48.6, a contraction. A weaker than expected number could fuel recession fears, weighting further on risk assets like Bitcoin. A stronger number could boost the dollar DXY, which is inversely correlated with Bitcoin. Markets are currently pricing almost a 90% of Powell of chance for a rate cut. So let's hope that Powell is not going to say anything that sounds bad for that. Earlier today, manufacturing PMIs from China and the Eurozone showed continued weakness, easing growth, adding to the global slowdown narrative that is currently dampening risk appetite. And it's obvious now that we need to reclaim 90K to continue talking about any upside, so we will continue to focus on that. General markets closed very positive last week, except for Nvidia, and pre-market prices are currently in the negative, at least for the S&P and for the Nasdaq. VXY hit very low levels in here that hasn't been seen since around mid-October, and that was the area where we started expanding again on the VXY. So watch out for any potential expansion from here, because we are at record lows of volatility on the VXY, and that can drag Nasdaq and S&P potentially to the downside. It doesn't need to play out precisely. Today is a call for the week in general, not in the next few hours, just to be very clear. And November on the monthly, on the S&P, look at this candle, how we managed to close. It is quite a bullish candle in my opinion, because basically after having all these green candles, this was supposed to be a red engulfing bearish candle, but it got bought up. It couldn't turn fully into green, so this is technically also the first red candle that we have for the S&P on a monthly time frame. And we are starting December, pre-market prices 4 points below it. So we'll see if this is going to have the negative effect for being the first red candle, or if it's going to have the positive effect because now you have so many shorts trapped in here. Looking at liquidity on the S&P, you can see that we have formed kind of a double bottom in here. It's kind of bullish because we also have kind of equal lows, and we have some sort of neckline and some much liquidity coming from the shorts that could potentially push this into 726. We haven't managed to put a new high, so that is the next thing to confirm that. Of course, do not trade the breakout, because levels around this area can turn into a liquidity hand and they can crush you from 700 all the way into the liquidity of 600. That's a recipe for disaster to enter in too late on a long. In terms of macros, we have some things in here that are starting to pile up in terms of bullish things. The Fed rate cuts are bullish, jobless claims bullish, the production of OPEC output post-extended through Q1 2026 that stabilized, that pushed the number from neutral we were last week into 6. We are neutral on Russia-Ukraine ceasefire, and there's a bunch of other elements that are starting to climb up in terms of bullishness towards Bitcoin. Let's see if the pressure is enough now to push Bitcoin higher. As a quick summary, all I care at the moment is what happens with the daily in here. Are we gonna fake out to the downside into 29 and do another attempt to break out from the top of the wedge thanks to all the bullish signals that we have in there? Or is the drama coming in from the rate increase from Japan going to make this even worse? And what is Powell gonna say later? All of that can basically make or break the current scenario, the current setup that is bullish on the daily, and it's still just a pullback. Breaking below that line, then we need to talk again. At that point, we could be facing as well another bearish cross in there, completely collapsing the promise from the bull one that we had a few days ago. Aggregated open interest, which I forgot to look in the beginning of the video, put a new low. That is a confirmation of the breakdown of the open interest. So this leaves me a little bit thinking that I'm gonna wait for that lower price to enter on an additional long. Guys, thanks so much for watching. Remember to hit the like, write down a comment down below, and I'll see you later with another video. Bye bye.